Are you concerned about the tax implications surrounding your crypto investment? Well then, you'll want to watch to the end to hear my questions and answers direct from the IRS itself. Let's dive into the world of cryptocurrency mining and that dreaded word, taxes. If you are a miner, you probably have thought if your operation is more a hobby or a business. This is the topic of today's video. If it is a hobby, well then enjoy. If yours is, however, a business, with your focus on growth, equipment and overhead, then you have one major question to ask. What kind of company structure works best for your situation? The clock is ticking as tax season looms just around the corner. This makes it the perfect time to consider the potential benefits of deductions and depreciation to pay as little taxes as possible. Typically, you have 6 business structures available: sole proprietorship, general partnership, limited liability partnership, limited liability company, and finally S or C corporation. Now, are you confused? Think about your crypto operation. Does it make sense to move to a company structure to help save on your taxes? Consider the racks or shelves holding your mining equipment, your GPU or ASICs miners, mining rigs or cases, your home office, the furniture you use, electronics like computer to monitor your farm, the power it consumes, electrical upgrades from 110 to 220, your internet and phone, and even a portion of your residence. These are all legal deductions as long as you are following the IRS guidance. A good document you should check out is Notice 2014-21 and other documents found at irs.gov website if you're in the US. Let me stop for a second and say this doesn't constitute financial or tax advice. It's always prudent to seek guidance from a tax professional before making any decisions or establishing your company structure. If not, it could cost you thousands in lost deductions or in fines because you didn't follow the laws that surround crypto investing and mining. For me and my operation, I chose a limited liability company. It cost me less than $200 to set it up online through the Secretary of State. I wanted the protection it offers for my situation, especially helping those who wanted to know more about digital assets. Or maybe you are someone thinking about retirement wanting to learn how to add crypto to your 401k and have no interest in mining crypto. Do you know at what point you are taxed in either situation? I got a question from a young lady in Chicago. She asks, how do I determine if my gain or loss is short-term or long-term capital gain or loss? Actually, this is very simple. The answer is, if you held the virtual currency for 1 year or less, you have a short-term situation. If you held the virtual currency for more than 1 year, now it's considered long-term. The period during which you held the virtual currency begins on the day after you acquired the virtual currency and ends on the day you sell or exchange it. You may be wondering if you will recognize a gain or loss when you sell your crypto for real currency. If you are in the US, the answer is yes. When you sell, you must recognize any capital gain or loss on the sale subject to any limitations on the deductibility of capital losses. For more information about this, please see IRS publication 544 Sales and Other Dispositions of Assets. Question: I want to give my children or grandchildren a bona fide gift of crypto. Do they have to declare it as income? This is a great question for a licensed tax professional. My understanding based on information from IRS FAQ question 31 is no. If you gift crypto, they will not recognize income until they sell, exchange, or otherwise dispose of it. Again, not financial advice. Seek a professional, however, see IRS publication 559. What about if you want to donate crypto to a charity? Do you have to recognize income, gain, or loss? The short answer is no. The important note here is the charity actually recognized as described in the IRS Code 170C. By now you may be thinking about what records do you need to maintain regarding your crypto transactions. This is probably the single most important question and answer of this video. The Internal Revenue Code and regulations require taxpayers to maintain records that are sufficient to establish the positions taken on tax returns. You should therefore maintain, for example, records documenting time, date, amount and price of the purchase, as well as moving it or selling for fiat currency. For more on this, check out IRS Fact 46. Now the stage is all set. It's time for you to share your own insights. Have you stumbled upon a tax strategy that is as valuable as the cryptocurrency you mine or hold? Please consider leaving a comment on what works for your situation. I would love to know how you handle your taxes. If you enjoyed this video, I invite you to like and subscribe. It really helps me to grow the channel.